Weekly outlook, election campaign trail set to pick up as BoE makes rate call with the general election now set for the 12th of December. The associated campaign trail, and all its theatrics, will kick into full swing this week, no doubt grabbing the UK wealth management community's attention. But money managers will be just as eager to hear the Bank of England's Monetary Policy Committee's stance on stimulus, expected on Thursday. The consensus call is for no change to the rate, despite the continuing Brexit malaise and negative outlook for the economy. But you never know. Monday 4 November UK Construction Purchasing Managers Index, Europe Manufacturing Purchasing Managers Indices. Tuesday 5 November, US ISM Non-Manufacturing dataCanaccord. Genuity Wealth Management Investment Manager Sam Buckingham noted last month's reading fell below even the most conservative estimates, down to 52.6, the lowest since August 2016. As a result, the revelation on the 31st of October that China doubts a long-term trade deal is possible with Trump is a cause for concern. However, he added, economists are expecting this slump in the index to be short-lived, with the consensus being for a rebound to 53.9. UK and US Services Purchasing Managers Indices. UK Balance of Trade Figures Warehouse Reit Interim Results Wednesday 6 November, US Oil Inventories Data Marks and Spencer Interim resultsAJ. Bell Investment Director Russ Mould said M&S became a FTSE 250 stock in September after its first ever relegation from the FTSE 100 amid a steady trickle of downgrades to analysts' profit forecasts, a dividend cut and investor skepticism over the purchase of a 50% stake in Ocado's food delivery business. Overall for the year, M&S has forecast that UK operating costs will be flat to down 1% and that capital investment will come in between £350 million and £400 million, up from £283 million last year, said Mould. Besides those numbers, investors and analysts will look toward the sales trends at both the food and clothing and home businesses, since both have been stuck in reverse gear for some time. Thursday 7 November, Bank of England's Monetary Policy Committee meeting. Buckingham said with Brexit continuing to paralyse any movement by the central bank, the market expects no change to the level of interest rates at 0.75%. The economic outlook remains relatively downbeat and in need of stimulus, despite the UK narrowly missing out on falling into a technical recession. The central bank arguably doesn't have much more room to manoeuvre to spur growth with interest rates starting from where they are. Instead, people are looking more and more towards fiscal stimulus, he said. Although it remains an unknown as to which government will be leading the country following the December general election, what is known is that rhetoric from major parties indicates we will be getting fiscal stimulus whatever the result. Mould said for more on this story, visit the news article link.